What's up, guys? Steven here with Steven's Best Loot, coming at you with another video. Today I wanted to talk about some of the strategies I use when it comes to buying and selling not just gold and silver, but stocks, cryptocurrencies, pretty much anything that has a tracked market price. Now, as we start to take a look at this screen, this might seem a little bit overwhelming to you guys, but I would say hang on with me. I'll do my best to explain. Also, would like to say I am not a licensed professional trader, financial advisor, anything like that. So do with this information what you will. This is not investment advice. Do with your money as you think is best. I just get asked a lot how I decide when to enter in and exit things. Also, I'm fairly known throughout my circles on social media of making a fair amount of predictions that usually turn out pretty close. And a lot of people wonder how I get there when I say I think silver is going to drop to this, or I think this stock or this currency is going to drop to this. This is honestly the simplest way and the thing I do the most. Now, the site I'm using here is a site called TradingView. I have a pro membership to it, so I can do all sorts of funky stuff with it. They do have a free version though, which lets you do a lot of the same stuff, just kind of limits you a little bit. With TradingView, you can pull up all sorts of different charts for just about anything you want. Here's silver, gold. Right now, what I want to look at is Litecoin. The reason I want to look at Litecoin is because this is a cryptocurrency I've traded for a number of years now, and it follows this pattern very consistently. So I think it's a real good example of where you can use this. Now, if you notice, there's a bunch of blue lines on the screen. So these blue lines are actually dating back to the last big crypto bull run, which was in the end of 2017, beginning of 2018. And these lines represent what we call support and resistance levels. You might hear that term thrown around a lot in trading or investing. Silver is at support levels, gold is at resistant levels, things like that. Basically what it means is that's where the action is going to happen. There's orders on the books, kind of holding the price at that point. So if you think about an order book in a exchange, there's going to be sell orders up here, buy orders down here, and where they meet in the middle is kind of where these lines come into play. So as an item goes up in price like Litecoin, when it hits a level where there's being more people trying to sell it than they are trying to buy it, then it has hit resistance and it starts going down. Once it's gone down to a point where more people are trying to buy it than they're trying to sell it, that would be considered support, and it goes back up. And these lines generally work for both. As you'll see, what is resistance one day, down the road turns into support, so on and so forth. So the lines kind of have a dual purpose, but basically it's generally price points where the action starts happening, and where you really want to look for your entries and exits. So these lines are going all the way back to 2017, 2018, but now we're applying them for current day. So to do this, if you're using TradingView, there's a tool up here. You go down to, where is it, horizontal ray, and then you just click where you want, and boom, it puts a horizontal ray across the screen. So what I'm going to show you guys is what I personally do when I'm buying and selling paper, gold and silver, stocks, cryptocurrencies, anything where you can instantly execute an order for buy and sell. Now, of course, if we're holding physical gold or silver, there's premiums and other things that come into play. But if you're buying or selling paper, gold or silver, or if you're getting into cryptocurrencies, which a lot of the stacking community is also into cryptos. Opinions go both ways on that, but this is the same way I trade those. So I set it up by looking for those support and resistance levels, and then we're gonna go until the beginning of this year. So when we're looking at January 2021 is where we're going to start off our chart here, going until current day. So we start off with 2021. Takes a big dip down, goes up, hits that support level and pushes back up quickly, hits this resistance, pulls back, pushes into support. It's just playing right here around this 140 line, right? It doesn't really know what to do here. It's bouncing all around, and then it finally breaks through that resistance and starts climbing up. We have a nice big bull run that ends at about 245, and then it comes crashing down hard. Now, when it comes crashing down hard, as you see, the way these wicks are designed, so there's a thick part and a thin part of each of these. And what those are is this is where the day opened is the top of the fat part, where the day ended is the bottom of the fat part. If it was a green candlestick, it would be the reversed. Day started here and ended here. And then the thin part is all the price movement throughout the day. So you see on this day, February 23rd, price started at 208. It shot all the way down to 160 throughout the day, but it closed out the trading day at 178. So that's how you read one of these sticks to see what it did for the day. So it shot down hard that day, bounced back up, tried to go up, got pushed down. It's just getting all rattled around. So this would look like a good entry point. It's setting right on a support. It's trying to push through the support, but it's getting rejected. So I would probably, if I've been watching this since the start of this year, which is somewhere around here, this would be my first good entry target. If we were coming in last year, there'd be an entry target too there. But I'd be coming in right here in this area for the first entry point of that year, which is going to be around March of 2021. Now we let that ride. It's going to go all the way up. Now we have our sell target here at the resistance, which is 220. So we're going to sell there at 220. If it keeps going up, then we'll reassess, but we're going to sell the majority, if not all, of our position at 220. And as you see, as they normally do, it gets rejected at the resistance level and starts falling back down, which then brings us right back to the support level where we would have our new buy order with the money that we made off of there entered in back at 173 again. Then it's going to go all the way up. Now this time when it goes through support, it goes through with a very big green candlestick. Typically, when you have a big move like that and then the following day is a big move, on this, the following day was unsure, right? The sells were beaten down, the buys, it was a very small candlestick that day. This day, another big candlestick. And then the next day, we have a red day, but it sets right down. So in this situation, I might not sell because I'm believing we might be creating a new support level. We pushed through resistance and now we're creating a new support level on to the next entry, which would lead me to ride it all the way up. Similar type of situation here. Lead me to ride it all the way up here most likely, but I could have sold out here as we started to push through resistance or anything else. But assuming we sold all the way, I think in reality, I sold at 325, which is right around here. I usually set my targets for just below resistance or just above support. But I think for the math, I put that, let's sell this here, right? So this rolls all the way up. So in this math, we missed out on some portion of this. And then it comes to a falling, painful red, just red day after red day after red day. And then finally, there's a support here that it seems to get rejected by. So you look at starts the day here, goes all the way under this 218 price target, but then gets pulled all the way back up almost to the top of resistance by the end of that day. So I would then be setting a price target right around here to buy back in towards this support level, because this support level was very strong, and sure enough, it touches that support level again. As I said, I usually set mine a little higher, so I probably would have bought in here around 225. In fact, I think I might have. So that would be my third trade, and then we're looking really strong. Every time it's going clean through the resistance, blowing through resistance, until it gets here. And now it starts having some trouble around that all-time high mark, the 400 plus range. In reality, when I did this trade, I sold it at 380, which is right around here, just under that. Let's say I exit it as it starts to come back down, or might set a stop loss at this 329. We're still making 219 to 329 there, even if we don't sell at the top. But I think I put it in the middle of this section. for my estimates if you traded this. Now, after that, we have a big red candlestick, shoots through multiple supports, so we're happy we're sold. Has some positive, but honestly, it's looking ugly at this point. And if you remember this time, a lot of cryptos were going down. So I probably wouldn't have traded this. Now, you still could trade this and make money during a down cycle. In fact, I did that all through the end of the last bull cycle when we went into a bear cycle. It's the same kind of idea. I didn't factor that in here because I'm just looking for clear entry positions. But, you could potentially buy on this support, sell on this resistance, buy, sell. So you could have made 2 more trades here, but I didn't even factor that in. Okay. So then we finally have a point here. So we saw this support hold up strong, and now it's pushing into that support again. So I would have put in a buy target somewhere in the lower end of the next support, because obviously there's a lot of support in this 106 to 120 area. So maybe put one in around 110, which it went all the way down to the next support level, but it quickly in the same day targeted up. So that's why you got to have those buy orders setting on there waiting. And so we would have made 110 all the way up to selling at the next resistance, 140. Once again, not looking super bullish, looking really bearish, a lot of red candlesticks. Set up another buy order at support around 105 on the bottom. And I think I have that one in here. Yep. And then we have a whole string of green candlesticks, right? So I wouldn't have sold back again at this resistance level because we're going into this with 1, 2, 3, 4 green days. Then we go on to 5, 6, 7, 8, 9, 10 green days. Couple of red days, could have got weak hands and sold here, but I probably would have had a stop loss back at this support and see how this rode out for the next trade. I would have added to my position most likely. I did put in this hypothetical scenario that you could have sold here as it bounced off resistance. I'm going to have some percentages here in a minute to show you guys how much you would make off just following this simple buy and sell support and resistance strategy. So I factored in that you did sell here and then re-entered back here when it was pushing into resistance again. But could have easily held through that considering the green to red day ratio. This is looking very bullish right here, and it continues on. So now we continue on past that price target. We try and get through the next resistance, but it's holding strong. But it continues to push into it. We're not seeing that big rejection like we see in other spots. It's continuing to push into it. So I would either re-enter or, if I hadn't sold this position, add more to my position right around here. It's still hanging out at that support level. Great time to add to a position when it's doing that. And then there's the pop. After that, one big green stick. See, when you see a lot of little sticks growing up, generally that's going to keep moving in that direction. In my opinion, when you have these big, massive moves, they're usually met with a big, massive move down a few days later. So after this big, massive move, would have put a sell in at the next resistance level, which is 220. That would have hit. It went all the way up to 230, but I would have gotten out of it at 220. Then we come back down. It's setting around support again, but this time it's setting around support after a bearish move, okay? That's a big difference. This one's going upward, green, 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 all the way into resistance, so we're going to expect it to keep going up. This one's going red, 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 all the way down into support, so we're going to expect it to keep going down. Now it starts bouncing off this, and we start having some green days again. So it's setting back on this support level. It gets rejected right at that support level. Every time it tries touching it, it's getting rejected and going back up. And then we start having green sticks. So I'd be re-entering here again around 140, 150 as we start moving towards the top. And once again, we're going into that resistance with a lot of green days. So you could sell here or you could hang on and set a stop loss back towards the bottom. But I would probably hang on through all of this. You know, if we had a sell target here at 220, it didn't touch it. It's still sitting around the middle, building momentum, and then boom, takes off to the moon. And I actually sold this one when I did this trade. I sold it at 280 right here at the resistance. Went all the way up to 300, but I recall selling it at 280. And now we're back down again, and we're coming down, a lot of red. But then look what happened here the last few days. Green, 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 green. 4 green days in a row, moving into that support once again. So it's building buy pressure as it's getting to the resistance, just like it was doing here. So I now entered back in to LTC right there. So if we look at these, that first trade, boom, boom, just here to here would have made you 25%. Next one here, I think, let's see, this is 174. So I put it here to here, would have made you 58%. Here to here would have made you 56%. Here to here would have made you 32%. Here to here would have made you 36%, assuming you didn't let it ride, but if you sold it out when it pushed off resistance here, 36%. Here to here, 32%. Here to all the way when the strength stops showing, right around there. I think I put this one sell around this level for this math, but 93%. So if we took a rather modest number, like let's say $1,000, and you did all of these trades times 1.25, you'd have $1,250 after the first trade. You rolled all that in the next trade times 1.58. You'd have $1,975 after the next trade times 1.56. You'd have $3,081 after the third trade times 1.32. $4,066 after the fourth trade times 1.36. $5,531 after the fifth trade times 1.32. $7,300 after the sixth trade times 1.93. $14,090 after the seventh trade, and you would have sold out right around here, and now we would have re-entered at, let's say, 210 at 14,000, so divided by 210. So you would have 67 Litecoin now at $210 with $1,000 initially invested at the beginning of the year. 67 Litecoin now. You guys can watch this video in the future. Right now I'm recording it. It's December 1st, December 1st trading day. So you could see how that does in the future. I would put a stop loss probably down around here around the 180 range if it starts to really break down there. But you see where 67 goes from here. My next sell would actually be, since we pushed into this 300 resistance, I would probably be looking for around 300 to 325 for the next move. Now, another thing you can look at along the same lines is with the support and resistance for different buy levels, you can start looking at trends as far as an upward trend. As you see, there's a very clear line that's kind of coming to where the bottom of all these trades end and the top of all these trades tap out. So we can do that same kind of thing here. And so now if we're watching, we're going to be looking for Litecoin's next big push to be up in that 300 to 325 range, and then work its way down towards 223 again. All of this info is pretty simple. You know, after just watching this video, I feel like you could pop into anything and do this same thing and look at these same areas and look at when to enter and when to exit. The biggest thing to remember is, you know, if there's a lot of green coming into it beating the support level, that generally means it's going to go up. If there's a lot of red coming into it, or sorry, a lot of green going into beating resistance, it's typically going to continue upward momentum. If there's a lot of red going down, it's typically going to make downward momentum. This is $1,000 into 14,000 in just 1 year. Now let's take into account that maybe you made some mistakes along the way. Maybe all these trades didn't go as good as I laid out here. I think I was really conservative with how I laid these out. It's not like I said, oh, buy here, sell here, buy here, sell here. This is all, I mean, very clear. These are lines going from 2 years ago that I'm using as my buy and sell targets. Very, very clear old indicators, not, you know, just saying, oh, buy here and it's going to go to 390. I can tell you it's going up because now I'm in hindsight. But buying here and selling on this line, buying on this line, selling on this line, it goes up, buy back where you sold last time, continues to go up, big sell off. So that's changing the momentum. You got to kind of wait and see where it lands. Okay, it's landing down in this area, in this price range. Now we start getting back in and continuing that same pattern as before. But even if you made some mistakes along the way, and let's say you only got half of these, you only identified half of these, you'd still be looking at somewhere around $5,000-$6,000 off of the year, off of 6 or 7 trades. You could map the same thing out just like we'd map it out here. Once you put the lines in there, you check the chart. It takes 10 seconds every day to see where it's going. Is it building up strength at a support where you want to buy in, or is it pushing quickly through the supports? All the resistance is rejecting it to lower and lower prices where you either would want to not have your money in, or if you're a more advanced trader, actually shorting and things like that. So once again, I'm not an expert on trading or anything. I've been buying and selling stocks, gold, silver, since I was in high school, and buying and selling cryptocurrencies since around 2016, 2017. So I've been trading both of those for quite a while. This is what I personally do with my own investments in all of those things. I do the same kind of pattern models for gold and silver, try and buy when we're on those support levels, and try and sell more when I'm on the resistance levels. The last thing I'll put out, this is a indicator, another indicator down here that you can use on TradeView called the RSI, and I have this set to a 14-day close. So what RSI stands for is Relative Strength Index, and that is basically how oversold or overbought, whatever you're trading, how oversold or overbought it is, depending on how it's closed the last 14 days. So when market closed, what its price was at and how much it's moved from that 14-day average price. So as you see, when it goes above about 70%, it tends to get hammered back down pretty quick. And same when it goes below 30%, tends to shoot up real quick. We have a lot of action here in the middle around 50%, which is right where we're at again. Another reason why I entered in here once again. Could be completely wrong. This could bounce off here and start going down. I would set some stop losses. We could turn into a bear market and this could start crawling this way. But currently I think we're going to see more action going up in this direction unless some stuff changes in the market. You got to remember as well, you can look at charts all day long. You can study stuff all day long, but buying and selling is an emotional thing. And so certain news, especially with cryptocurrencies, positive, negative news can affect these quite a bit. Same thing with gold and silver. We just saw the massive dip that palladium took the last few days after the car sales reports came out that they're not pulling as much palladium because cars aren't selling as much. Big sell-off in palladium. So you'll see a lot of stuff like that happen depending on news. Palladium could have looked great on the chart, but the news beat it out and caused it to go into a selling frenzy, just like positive news can send stuff into a buying frenzy. So hopefully you guys enjoyed this video. If you did, please like, subscribe. I'm going to try and put out more and more content here on YouTube, not just about gold and silver, but investing, cryptocurrencies, stacking, all sorts of different stuff. Kind of whatever I feel like or whatever you guys suggest. So if you're into that type of thing, feel free, subscribe. I do a lot of content on Instagram. Feel free to follow me on there at Steven's Best Loot and check me out there. Also, that's the best place to DM me if you guys want to talk one-on-one or anything like that. Hopefully this video was helpful to you guys. I don't personally think it's too difficult. If you do think it's difficult, leave me a comment down below. If all this went way over your head, if you think I'm an idiot and I'm just guessing at all this, feel free, drop a comment below. There's a lot more indicators you can use on here. There's literally thousands and thousands of them. Personally, I think the cleaner your chart is, the better. I work mostly off support and resistance lines, trend lines, RSI, and then I look at volume of trades. So those are my biggest indicators. A lot of people use moving averages as well, I'll pull some of those in. I will say though, the messier your charts get, the more likely it is for you to talk yourself into a purchase or a sale. That isn't necessarily a good idea because I just entered in here. As I said, I'm looking for it to move up. If it starts moving down, I'll have stop losses in place. I could go through these indicators all day until I found stuff that says this should be a sell right here, and then talk myself out of entering it. So I think the more comfortable you are with using what indicators you're looking at, and the more practice and familiarity you have with what these look like and what tools you're using to assess your investment, I think the better you'll end off. So with that, thank you guys so much. Make sure you like the video. Drop a comment down below. I'd love to hear your thoughts on this. Do you want to see more content like this? Was this helpful? Was this interesting? I'd love to know. Thank you guys so much. I will see you in the next video. Have a great day.